Well, a health reimbursement account allows you as a small business owner slash entrepreneur slash whatever you want to call yourself to, to write off almost every single medical expense that you and your families are going to incur. Now, that's everything from copays to medical insurance premiums and so much more. What I want to do is quickly show you a list of the items that you can write off so you can see if this is beneficial for you. And then we'll start talking about the power of the write-off and what is a deduction and how much you're really going to get back or how much money you're going to really keep for doing a medical reimbursement account or an HRA or a medical expense reimbursement account, the MERP. All right, so let me switch over here. We're going to show you what we're looking at for taking these deductions. Here we go. All right, so IRS section 213 subcode D, I don't know. So this is showing you that I'm not just full of hot air. I'm actually going straight from the IRS code sections. This is actually written into IRS code, into IRS law, so that you can take these qualified medical expenses. All right, so what type of eligible expenses do we have? Well, let's look at dental, right? We all have teeth. Well, hopefully you have teeth. Oral surgery, that costs thousands and thousands of dollars. Orthodontics, braces, thousands and thousands of dollars. A lot of times this stuff is not covered by your traditional health plan or your health insurance. If it's not, and you want to go in for oral surgery or for braces, you're going to have huge amounts of write-offs, thousands and thousands of dollars worth for going through these oral surgeries and things like that. Insurance, we're talking about copays, right? So if you got to pay $25, $35 every time you go see a doctor, that's your copays. Those are all, you can do a reimbursement for those. Lab tests, blood tests, medications, prescribed drugs. So if you're paying, $50 a month, $100 a month for prescribed drugs, there you go. Here's a tax write-off for it. Allergies, antacids. I don't know about you, but my allergies are so bad during the springtime. I have to have that allergy medicine. So there's $20, $30 for a write-off right there. Aspirin, calcium, cold medicine, cough drops, first aid, motion sickness pills. All this stuff is stuff that you're probably buying already, especially if you have kids. Kids are expensive. Kids need this kind of stuff. Reading glasses, Visine, weight loss drugs to treat a specific disease. So it's not just like, let's just lose weight. That wouldn't count. You actually have to have a doctor's orders or a doctor's prescription saying that it's going to help with diabetes if you lose weight, and then you can write off weight loss drugs. Up here, practitioners, we have allergists, we have chiropractors, dermatologists, homeopath, naturopath. These ones here are huge, guys. Homeopath and naturopath. I haven't seen a health insurance yet that covers homeopath and naturopath. Especially here in the Bay Area, we have quite a few of these doctors, and it's amazing now that we can actually have a tax write-off or a tax benefit for it. What other thing we got? We have drug addiction, hearing exams, hospital services, infertility, IVF is so expensive. Being able to write that off. Rolfing, this is a fun one here. If you've never heard of rolfing, it's basically like massage therapy, but it's a special type of massage therapy referred to as rolfing. So, if you're already going to a massage therapist, switch over to a rolfing specialist, or hopefully they're a rolfing specialist. Now it just became a tax deduction for you. All right, there's tons of other things. I'm not going to go through all these. Eyeglasses, see, I got eyeglasses. Those are important. So what we're really doing is looking at all of these items that you can write off as tax deductions. What can you not write off? What is ineligible? Things like cosmetics, chapsticks, moisturizers, one-a-day vitamins, suntan lotion, toothpaste. Yeah, your typical stuff. Everyone's going to buy those. You can't take a write-off for those. Maternity clothes. I thought this is always funny. Everyone's trying to always write off maternity clothes. You can't write off maternity clothes. Diaper service, if you have little ones, contact lens insurance, because some of these insurances, you're not able to write those off. So I hope you found something in here that correlates with you, or that would apply to you. If not, hey, you can always set up the health reimbursement plan just in case, right? Insurance, you have it just in case something happens. All right, so how to set up a health reimbursement account. So the first thing that we're going to do is we need to have a business structure that works with the HRA, or the health reimbursement account. Now that is either one of two structures. You can either do the sole proprietor, or you can have the corporation. Now, let me make this very clear. It does not work with S corporations. So if you're an S corporation, I've created a secondary video for you to actually show you how to set up a separate company, a sole proprietorship, so that you can take advantage of the hiring your kids strategy, and then also the health reimbursement account strategy. But that's a secondary video. So once we have determined whether we're going to be a corporation or a sole proprietorship, what we're going to want to do is hire an employee. Right? If you're married, that's great. Your spouse can be your employee. If you're not married, you have to use the corporate structure. And then once you're a corporation, you're using the corporate structure, you become an employee of the corporation, and then we can install the HRA. Now, I also want to make other thing very clear, is that this does not work if you have other employees. So if you have an employee that's not family related, you cannot use the MERP without going through a third-party company that's going to monitor it and to take care of it for you. And the reason for that is because of the Affordable Care Act, the ACA, commonly known as Obamacare. And what this does is there's additional rules and important things to know about setting up the medical expense reimbursement plan, the MERP, for your employees. So like I said, everything that we're going to be covering today here is just if you're married or you're not married, and it's covering either you or you and your spouse and your kids, just your direct family. This does not work if you have employees outside of your family. All right, so once we've got that started, what we're going to do is, like I said, we need an employee. So if you're married, your spouse is a great employee. She might not, or he or she may not be a great employee, but it's great for this example. So what we're going to do is we're going to look at the employment agreement. So an employment agreement is basically putting into the employment agreement is putting into place what the employee is going to do and how they're going to work with the company. So here is a sample employment agreement. It basically boilerplate information. This agreement is entered onto blank between blank the employer and blank the employee. References to employee using the masculine gender shall be determined to include the feminine gender and vice versa. Blah, 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 blah. Legalese. Number one, employment. Employer hereby employs employee as blank, right? So what are you going to do? Is your spouse good at website design or advertising or social media or accounting or bookkeeping or cleaning up, janitorial services? What are those items that your spouse excels at? And you can hire your spouse to do those things that they excel at. And that way, we're creating this employment agreement so that the spouse can work inside the business. Term. Employees' employment shall begin on blank, shall continue to the will of both parties. You want to make sure that the date you choose here under term is giving you the correct dates that you want to have the medical reimbursement plan set up, or the health reimbursement account, the HRA. You want to make sure that these dates align and they are the same date, because we want to make sure that all of your medical expenses are covered. So you want to have this term date, or the employment beginning date, as early as you can, so that you can cover as many health-related costs as possible. All right, so employer, and employee may terminate this agreement at any time, blah, 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 legally speak, don't worry about it. Compensation. This is really important with the health reimbursement account. You do not need to compensate your spouse or compensate the employee monetarily. What do I mean by that? They do not need a paycheck. Their sole compensation can be the health reimbursement account or the medical expenses that are reimbursed. Let me give you an example. Let's say that your out-of-pocket copays and prescription drugs, and let's say you're paying on medical costs, right? Let's say that that's $300 a month. So you could write the check to cover the medical expense reimbursements of the $300 without actually having to pay a salary, right? So typically you would pay, I don't know, anywhere from $10 to $20 an hour or more for an employee. But the compensation, when we're looking at the health reimbursement account, you do not need to compensate your spouse or the employee that we're talking about here with money, right? We do not need to say it's $20 an hour and you're getting paid, X number of hours. You don't need to do that. The sole compensation can be the medical expense reimbursements. So that's important to know when we're doing this. Expenses. Employees expected to promote employer's business, blah, 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 legalese, confidentiality, just boilerplate employment template. It's not that important. The only thing that's important is having it in writing so that if and when you do get audited by the IRS, knock on wood you don't, just in case, but you'll have this information. All right, so that is the employment agreement. The next thing I want to show you is the timesheet. Now, I mentioned that you don't have to actually create an hourly wage, but you do need to be tracking the employee timesheet. So this is a basic employee timesheet. I have this one. I have another one that you can use. But basically, this one says on the first of the month, this is what the person did. This is the time in, this is the time out, or this was the total hours that they worked. Again, this is really important, making sure that the duties match up to what the spouse is capable of, right? So if your spouse has never done bookkeeping or accounting, do not put bookkeeping and accounting. If your spouse has never went on social media or has never been they don't have any experience with Instagram or with Facebook, do not call them a social media consultant, or do not say that they're an employee helping you with social media, because the truth is that they're not. So what's really important is when you're doing the employee timesheet, you want to make sure that you fill this out correctly with the duties that they're actually performing. Now, do they really need to perform these duties? Yes, right? Because we're finding these tax benefits, these tax savings. But in order to get these tax savings, there are some loopholes that we have to follow. There are some documents that we have to do. So because we're going to be taking care of these documents, we are going to be making sure that all of these documents are filled out the way that the IRS wants them to be filled out. And then by doing that, we know that we're in compliance. And by being compliant, we can take advantage of all of these tax benefits. All right, so the next thing I want to show you is the medical expense reimbursement plan. This is the MERP, or the HRA. So this is going to go step by step through what the MERP is, how it covers your employees, and what's covered and what's not. So here, number one, medical expense reimbursement, effective as of blank, blank, blank. So whatever date you want to start the plan, that's the date you put on there. Employers shall reimburse all eligible employees on a monthly basis for medical expenses, included in paragraph 3, below that they incur on behalf of themselves, their spouses, and their dependents, as refined in Internal Revenue Code section 152. So what does this mean? Well, this means that when you hire your spouse as an employee for your sole proprietorship business or your C corporation business, your spouse is your employee. And when your spouse is your employee, their spouse is also covered, which is you. And all your dependent children are also covered. So this is a huge way of protecting your entire family against high tax bills because you could write off all your medical costs. All right, next one, number 2, eligibility. Employees shall be eligible except, and then you can mark off which one you want, those who work less than 25 hours, those who work less than 7 months, those under 25, worked for the employer for less than 3 years, covered by a collective bargaining agreement. So this way you can kind of tweak what, if you have other employees, what employees are covered and what employees aren't. But honestly, you're going to want to go through a third-party company like Task or Base. Task is TASC, and Base is BASE. Task or Base, either one of those companies is a third-party provider that's going to walk you through and make sure that you're compliant on all the ADA items. But in this case, in this course, really what we're going to be focusing in on is just the husband and wife or the spouse with kids or without kids, or a single person using the corporation. So here you can kind of tweak who is eligible. And then remember, when you're looking at this, it says all employees shall be eligible except. So what I recommend doing is don't check any of these boxes so that all of your employees are eligible. Because if you're just starting this brand new company, you don't want to be limiting any of those eligibilities for your new hires, which will be your spouse. All right, qualifying benefits. Number 3, medical expenses shall include any expense qualified under Internal Revenue Code section 213D, which is the one that I just showed you, where we started off with this video to make sure that this is something that you would actually find some tax benefits for. Maximum benefits. Employer shall limit reimbursements to any employee to blank per calendar year. You can limit this to $10,000, $100,000, something reasonable. So anywhere between $10,000 and $100,000, you're going to be spot on. Next one, reimbursement. Employer may reimburse employee for eligible expenses or pay medical providers directly. Employees applying for reimbursement shall submit all premium notices and eligible bills not more than 30 days after the end of the month in which they are paid. Failure to comply with this requirement may terminate employees' right to reimbursement for expenses not timely submitted. What does this mean? Well, this means that your employees have to give you their receipts for their medical expenses. So what's going to happen is, let's say I need allergy medicine. So I go over to CVS or Walgreens or wherever I want to go for my allergy medicine. I spend $30 on allergy medicine, and I have a receipt for $30. So then I'm going to give that to my employer along with a sheet, which I'll show you here in just a moment. The sheet is going to be a reimbursement sheet. So on the reimbursement sheet, I'm going to list out allergy medicine purchased from CVS or Walgreens, spent $30 on this date. And then the employer can write me a check once I give them the form, once I submit the form to them, that reimbursement form. So what's happening here is we're reimbursing the medical expenses to the employee from the business. And that's how the MERP works. All right. Number 6, unfunded plan. Basically what this says is this is not an HSA, which is a health savings account. It's not an FSA, a flexible spending account, which with those accounts you actually put money in and then you spend money out of the account. That's not what this is. This is a medical reimbursement program. It's not an account. It's a program. So number 6, when it's talking about an unfunded plan, that's what this is talking about. It's a reimbursement, not a account. So we're not actually putting money into it like an HSA or an FSA, flexible spending account. I have a separate video on the different types of FSAs, HRAs, HSA, so you can look at that a little bit later. Coordination with insurance. Employer shall reimburse employee only in the event to the extent which expenses are not covered by any insurance policies or benefits, whether owned by the employer or the employee, provided under other accident or health insurance plans, or provided by federal or state government agencies. Basically what this means is that if your insurance provider is going to pay for chiropractic services, then you can't get a reimbursement for chiropractic services because you didn't pay for it. It was covered under under your insurance plan. So anything that's covered by insurance, you cannot use the MERP to cover it because that would be double dipping. You're not allowed to double dip. Great example for this is a chiropractor. So if your insurance, if your medical insurance does not cover chiropractic, which a lot of them don't, and you want to visit the chiropractor, the MERP plan is amazing because it's not covered by insurance, but it is covered by the MERP. So you can take it as a write-off through the MERP after paying for it using your personal funds. All right. Coordination with insurance, amendment and termination, notice, blah, 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 blah. Okay, so that's just legalese, finishing up the, what is it? That's the medical expense reimbursement plan. So those are the plan documents. The other thing that I wanted to show you is this form right here. This is the medical expense reimbursement form. So for the employee, you just put the employee's name. Remember, the employee is not the spouse. So if I hired my spouse is Vicky. So if I hired Vicky, then Vicky would be the employee. Now, my costs as her spouse, as her husband, are covered. So the employee is still Vicky, but Vicky is going to be, it's going to allow me to write off my expenses because I am Vicky's spouse. So on the reimbursement form, employee is the spouse that is hired, is the employed spouse. So here you can put the date, the expense, and the cost. Just do this once a month and write yourself a check, and that check that you write to yourself is 100% tax deductible as long as it meets the Section 152D requirements that we talked about before. All right, let me see if there's anything else that we wanted to, here it is. This is the 105 plan employee enrollment. 105 plan employee enrollment. So this form right here, you just put your business name, which is the employer, phone, email, employee name, social security number, their spouse and their dependent. This is, again, just a formality. It's just a formal form that you have to fill out just to make sure that we can take the MERP and use the HRA. And you can put all the dependent information there. If you need room, if you have more than 6 dependents, you can use another form. And make sure to sign it and date it and have all of your ducks in a row.